All right, guys, we're going to talk about an AI stock that is up 2,000% in the last 10 years and still has room to go up 100% here, per one of the biggest analysts out there who covers this. 100% still upside from where the currently price is. And price is actually a little bit depressed right now, so you can get it at a discount. It's actually down about 37%. We'll talk about that and why I still think there's a lot of room here. So we're going to jump into this. And by the way, this is obviously not Nvidia. It is not Palantir. It is a really good AI stock play that I guarantee you probably haven't heard of. So let's reveal it and jump in right now. Okay, so the company is Axon, and what they do is they are the market leader in tasers, body cameras, and digital evidence management software, and they're integrating AI into their product ecosystem. They have a massive upside. They really haven't even tapped their entire market opportunity. Their entire market opportunity is a $159 billion addressable market, and really just scratching the surface. We're going to jump into their numbers here in just a minute. Okay, but again, remember, I mentioned 2,000% in the last 10 years, and it still could store 103%. So we're going to talk about and look at the structure here. In the last year, I told you it's down 37%. Okay, 5-year 179%, and a lot of that growth obviously happened in the last 5 years outside of the last year, which has been down. You can see kind of year to date here. It started the year at 563 and currently trading at 393. Now, so opportunity, right? It depends on how you want to look at it. Not everything is out there just blowing and going up, but this one is in a depressed situation. Think of it this way: it's at a 37% discount today versus where the price was trading at a year ago. Okay. All right. So let's continue to move on here. So Wall Street expects Axon's adjusted earnings to increase 24% annually through 27, making the current valuation of 59 times earnings very tolerable. Okay. So here's the two major price forecasts looking right here. The most bearish price forecast from UBS reiterated price target of $570 per share, which is a 40% upside from the current price. Again, good return on investment, 40%. Most bullish forecast comes from TD Cowen and reiterating a price of $825 per share, putting it at 103 upside from the current price, which again, current price is trading at 393 and change. Okay. So the opportunity here for this one is interesting. This is not a pure AI play like when we're talking about Nvidia or Palantir or Intel, and there's some good diversification potential here. Again, considering you're looking at it's a 37% discount right now from where it was a year ago, and we've got these forecasts coming from these individuals looking at between 40 and 100% upside from here. So a good return on investments. So as I mentioned, they create and produce safety technology for law enforcement, enterprise, government agencies, things of that nature. They do include energy weapons, tasers, body-worn cameras, and in-car cameras. They have a software portfolio as well. And there's some recurring revenue in these software portfolios. A lot of these law enforcement agencies leverage, yes, their tasers and their kind of tactical gear, but the real money is definitely, or a lot of the money is in the service side of it, where there's different things like that, like, for example, Draft One is a generative AI software that automates report writing. Okay. You can see kind of why a lot of these, different law enforcement agencies would want that. Speeds up the process of creating and documenting the reports, things of this nature. They have Axon Assistant, which is a AI product that lets users query evidence, reports, and agency data in natural language. That's really, really cool. And can be, it works with Axon's body cameras and digital evidence management system. Again, a lot of integration here. And okay, so let's take a look at their numbers. Again, they're in a $159 billion addressable market, really are the leaders that do this. Okay. And fourth quarter financial results came in 39% up to $797 million. So again, they beat their estimates. Earnings increased 84% to $2.15 per diluted share. Bookings, contracted sales not yet recognized, increased 43% to $14.4 billion. They have a tremendous amount of growth. They have a tremendous amount of revenue that hasn't even been recognized, which again kind of goes back to why I think even at this depressed price, if we're looking at a 1-year number down 30%, maybe you start to see where the value is here and why this one is kind of one of those sleeping giants. It could be really a diamond in the rough. Okay. So we're going to take, as I said, just wanted to kind of make you aware of this. Thanks for giving me a few minutes on your way out. If you would please hit that like, hit that subscribe. I appreciate you. And we'll see you in the next video.